I'm Kim Cawthorne. I am with Prestige Mortgages, which is part of the Astute Group. I have been a broker for 14 years and in finance for 26 years all up. I have been accredited with Australian First Mortgage for the whole time that they've existed. They approached me when they first began, and they've proven themselves time and time again to be very professional yet very personal family business. I love the products that are available to us. There's a range of options. If it doesn't fit with one, if it needs to go to an alternate lender, that option's available and it's all done on one application form. The rates are competitive and the products are good. And the best part is you can actually talk directly to the assessor without being screened or having to go through layers. So that is why I love dealing with AFM.
Hi, my name's David Seeger. My company is Seeger Financial Services. We've been around for the last 15 years and we've been using AFM since they first launched, which was over 11 years ago. My background is, before becoming a broker, I worked in St George Bank for almost 10 years. Worked my way up to a branch manager and then decided to go out into the broker network. What I like about non-bank lenders is that it's more of a personal transaction when you use a non-bank lender. With the majors, we're submitting a lot of deals online, which is fine. However, to try and, I guess, track down the deal and see how it's progressing, it can take a long time as you go through many queues and try to talk to somebody, where with Australian First Mortgages, as soon as you pick up the phone, you're talking directly with the credit manager, you're able to order a valuation and get things moving straight away where need be. And I just believe, even from a settlement process, you can get your settlements done very quickly if things need to be done. I find that the non-bank lenders can pick up the phone, talk to their settlements area and get docs issued straight away.
I would suggest that when you're putting the deal together, put it together as though you're going to be the credit manager. You are going to be picking up that deal and approving it, and you would want to know why you should approve the deal. So highlight all the strengths, highlight any weaknesses, and then mitigate them with a strength as to why the lender should be approving it. And ask yourself the question, if this were my money, would I be giving it to this client? And if you can answer confidently yes, then I think that deal's ready to go in. If there's any room for doubt, then just work on it a little bit more until such time as that when that lender or assessor picks it up, they're confident that you've thought about it thoroughly and that you've assessed it yourself and that it is a good deal and it should be approved.
I guess a tip for would have been for myself as well as new brokers that are starting, is one of the reasons why I use AFM, and especially nowadays where credit scoring is very important, and it's also an issue with, I guess they call it, hits on your credit file. By using Australian First Mortgages, you're filling out their application form, you're sending all the paperwork through. You may have a client who doesn't realise they've got adverse credit. So all of a sudden you're submitting a deal and you believe it's an A-grade deal and it should go through quickly. Then all of a sudden credit will ring you and say, guess what, this person's got 2 unpaid defaults. The client might not realise that because they've changed addresses and some of their bills didn't turn up. Now, rather than a major bank saying, sorry, that loan's now declined, you need to put it somewhere else, Australian First Mortgages will come back and say, look, it doesn't fit our A-grade product. However, we can get the loan set. Here are the rates and the conditions for the loan. You've only had to fill out the one application form and it's only the one hit on the credit file. So you'll look, I guess, very, you look good in front of your client. You've helped your client if they go for finance in the future, because the last thing you want to do is submit a deal, have it declined, and then have to resubmit it to somebody else, and that's an extra hit on their credit file. So I think the major thing with using AFM and using a story like that is you can have deals where your client thinks their credit's good, we assume that it is, and little things like that can ruin a deal and affect a person's borrowing capacity for the future. So by using AFM, it's a one-stop shop to an extent where, yes, if it fits the A-grade product, fantastic. If it doesn't, there's always an alternative, and it's only the one form and the one hit on the file.